Welcome back, everyone. Ready for another deep dive?
Always.
Today, we're tackling something I think a lot of us struggle with, trading psychology.
Oh, yeah. That can be tricky.
We'll be using Tom Hougaard's book, Best Loser Wins. It's not your typical trading book, focused on charts and indicators. This one really digs into the mental game.
It's a good one. Gets right to the heart of why so many people struggle in the markets.
Exactly. So, before we jump in, for anyone not familiar with Tom Hougaard,
Yeah, give us a little background.
he's a professional trader, been doing it for over 20 years. He's also a coach and mentor, so he's seen firsthand how psychology can make or break a trader.
He's got some strong opinions, that's for sure,
Yeah.
but he backs them up with real-world experience.
Absolutely. And that's what makes this book so interesting. He doesn't sugarcoat things. He starts right off the bat with this kind of shocking statistic. You ready for this?
Hit me.
80% of retail traders lose money across major brokers.
Yep, 80%.
Mm.
It's a tough business.
80%. That's well, it's a bit depressing, honestly. You'd think with all the information out there, the books, the courses, the technology, the odds wouldn't be stacked so heavily against us,
It's not about the information. That's the thing. If it were, everyone who read a trading book would be a millionaire.
Right. So what is it then? What's the missing piece?
Well, that's what Hougaard tries to answer in this book. And his argument basically is that we're hardwired to think in ways that sabotage our trading success.
We're fighting our own biology. That's a cheery thought.
It's not easy. Our brains are wired for everyday life, not for the complexities of the market. So we have to kind of retrain ourselves to think differently.
Okay, so give me an example. How does our everyday thinking mess us up when it comes to trading?
Well, think about how we're conditioned to shop, right?
Sure.
We look for deals, we wait for sales, we want to buy low and sell high. It's ingrained in us.
Yeah, makes sense. I love a good bargain. Who doesn't?
Exactly. But that supermarket mentality, as Hougaard calls it, can backfire big time in the stock market.
Okay, so how does that play out? Give me a real-world scenario.
Imagine a stock is plummeting. What's your first instinct?
Probably to stay far, far away.
Maybe. But for a lot of people, that instinct to buy low kicks in. They see the price dropping and think, oh, it's so cheap now it has to go back up.
So they're jumping in at what they think is the bottom.
But often, they're catching a falling knife. The stock keeps dropping, and they end up buying high and selling low, which is the opposite of what they wanted to do.
Ouch. I mean, I've definitely felt that temptation to buy a stock when it's down, thinking I'm getting a great deal.
It's a powerful urge. Hougaard actually gives this really vivid example in the book. It's about this footsie trader who was so convinced that Northern Rock was a steal, even as the stock was tanking.
Oh, yeah, I think I remember reading about that. What happened?
He kept buying and buying and buying, ignoring all the warning signs, lost a ton of money.
Wow. That's a sobering reminder that our instincts aren't always right, especially when it comes to the market.
It's about recognizing those ingrained thought patterns, those supermarket instincts, and learning to override them when necessary.
Okay, so we've identified the problem. We're basically fighting our own brains. Now, how do we win that fight? Does Hougaard offer any solutions?
He does. And it's not always what you'd expect. He talks a lot about the power of disgust.
Disgust, as in feeling repulsed by something. How does that help with trading?
Well, he tells this very personal story about his own struggle with alcoholism. And he says that what finally motivated him to change wasn't just disappointment, but a deep sense of disgust with his own behavior and the consequences it was having.
So he's saying that feeling disgusted by something can be a powerful motivator for change.
Exactly. It's about confronting your mistakes, your bad habits, with a level of honesty and, well, revulsion that forces you to take action.
Wow. I mean, I've definitely felt frustrated with myself after a bad trade, but disgust, that's a whole other level.
It's not about dwelling in negativity, though. It's about using that visceral feeling as a catalyst for improvement.
So in terms of trading, what would that look like?
Instead of brushing aside a losing trade or making excuses, you really dig into it. You analyze what went wrong, what triggered the mistake, and you let yourself feel that disgust. Not at yourself, necessarily, but at the action, the decision that led to the loss.
So it's like a form of aversion therapy. You make the experience so unpleasant that you're less likely to repeat it.
It's a bit like that. It's about creating a strong emotional connection to the consequences of your actions.
It makes you think, what aspect of EPUA trading would I be most disgusted to analyze?
That's a great question. And it's different for everyone. But identifying those points of disgust can be really powerful. It forces you to confront the things you might be avoiding.
Okay, so disgust is one tool. What else does Hougaard recommend for developing a winning mindset?
He also talks a lot about the importance of embracing failure, which might seem counterintuitive, right?
Totally. Most of us are wired to avoid failure at all costs.
But in trading, and I think in life in general, failure is inevitable. It's part of the process.
So it's about shifting our perspective on failure.
Exactly. Instead of seeing it as a setback, see it as data, as valuable information to learn from.
Easier said than done, I think. Does he give any examples of how to actually do that?
Well, he talks about athletes, like Kobe Bryant. Even after sinking thousands of baskets, Kobe still practiced relentlessly, knowing full well there would be countless misses along the way. He embraced those misses as part of the process.
So it's not about being perfect, it's about being persistent.
And analytical. Hougaard meticulously dissects his losing trades. He analyzes them in detail to understand where he went wrong, what triggered the mistake, and how to avoid it in the future.
That takes discipline. Do you think most traders actually do that, really dig into their losses?
I think most avoid it. It's painful to confront our mistakes, but that's where the real growth happens.
So you're saying we should be keeping a trading journal?
He calls it a book of truths, which I love. It's not just about the numbers, though. It's about documenting your emotions, your thought processes, any external factors that might have influenced your decisions.
So you're basically becoming your own therapist, uncovering those unconscious patterns that might be sabotaging your trades.
It's a bit like that. And once you identify those patterns, you can start to address them.
This is all really interesting, but I have to admit, it sounds pretty intense. I mean, pre-trading visualization, confronting my disgust, dissecting every loss.
It's not for the faint of heart. But if you're serious about improving your trading, about developing a winning mindset, these are the things that separate the amateurs from the professionals.
So what's next? What other mental tricks does Hougaard have up his sleeve?
Well, this is where it gets really interesting. He talks about this pre-trading routine that I've never heard anyone else recommend.
Oh, I'm intrigued. Lay it on me.
But for each trading day, he dedicates time to see Walaya, visualizing worst-case scenarios.
Hold on. Intentionally putting yourself through that kind of mental anguish, why would anyone do that?
It sounds masochistic, I know, but the logic behind it is fascinating. He says that by repeatedly confronting those fears in your mind, the actual experience becomes less emotionally charged when or if it happens in real life.
So it's like a mental inoculation. You expose yourself to the virus in a controlled environment to build up immunity.
Exactly. He'd visualize losing a significant sum, like the cost of his car, to truly desensitize himself to the potential pain of a loss.
That's hardcore. I mean, I write down my creating goals, but I've never gone full method actor on potential losses.
It's next-level mental training. And it speaks to the importance of managing your emotions, your fears, your reactions under pressure.
This is all starting to paint a picture of a very different kind of trader than what we usually see portrayed. You know, the slick Wall Street guy making millions overnight.
Right. It's about discipline, resilience, self-awareness. It's about mastering your mind as much as mastering the markets.
And that takes work, consistent effort, even when you don't feel like it.
It's a journey. And like any journey, there will be ups and downs. But if you stick with it, if you embrace the process, the rewards can be incredible.
Okay, so we've talked about battling our supermarket mentality, using disgust as a motivator, and embracing failure as a learning opportunity. What else? Does Hougaard offer any specific trading strategies that align with this mindset?
He does. And this is one that really surprised me. He's a big believer in scaling into winning positions, not averaging down on losers.
Wait, what? That goes against everything I thought I knew about trading? Isn't the idea to buy more when the price drops to lower your average cost?
That's the conventional wisdom. But Hougaard flips the script. He says, why double down on something that's clearly not working? Why throw good money after bad?
Okay, I see his point. But emotionally, it feels so much harder to add to a winning position. Like, what if the market turns against me and I lose those gains?
That's the fear talking.
Yeah.
And it's what prevents a lot of traders from maximizing their profits.
So you're saying we should be embracing the fear and doubling down on our winners?
If you've done your analysis, if you trust your strategy, then yes. Adding to a winning position allows you to ride the momentum and potentially multiply your profits.
It's like you're saying, I believe in this trade so much, I'm willing to bet even bigger on it. It takes a lot of confidence.
It does. And Hougaard doesn't shy away from that. He shares a detailed anecdote about a time he aggressively added to a winning Dow Jones trade, scaling into his position as the market moved in his favor.
So he practices what he preaches.
He does. And he emphasizes that even experienced traders feel that fear, that hesitation. It's about learning to manage those emotions, to not let them dictate your actions.
Okay, we've covered a lot of ground here, from battling our ingrained biases to understanding the psychology of the crowd. It's amazing how much of trading success comes down to mastering our own minds.
Absolutely. And I think we've just scratched the surface here. There's so much more to explore in Hougaard's book.
Well, luckily for us, we have more time to dive deeper.
Let's do it.
So we've established that our brains can be our own worst enemies when it comes to trading.
Yeah, we've got all these ingrained biases and thought patterns that just don't serve us well in the market.
But how do we actually change that? Like, is it possible to rewire our brains to think differently about trading?
It's not easy, that's for sure. But Hougaard offers some concrete strategies in the book.
Okay, I'm all ears.
One of the big things he emphasizes is constantly challenging your assumptions.
Challenging my assumptions. Like, what do you mean by that?
Questioning everything you think you know about the market. Not taking anything for granted.
So, like, even if I've had some success with a particular approach, I should still be questioning it.
Absolutely.
Yeah.
Because what worked in the past might not work in the future.
Mm.
And sometimes those very beliefs we cling to can actually hold us back.
That's interesting. I guess it's easy to get stuck in our ways, especially when we've seen some positive results.
He actually says that over-relying on charts can be detrimental.
Whoa, hold on. Charts are like the holy grail for so many traders. Are you saying we should ditch them altogether?
Not necessarily charts are a valuable tool, but they're only as good as the person interpreting them.
Okay, that makes sense. It's like having a map but not knowing how to read a compass. You might have all the information, but you'll still get lost if you don't know how to use it.
Right. And Hougaard's point is that if you're clinging to preconceived notions or letting your emotions cloud your judgment, the charts won't save you.
So it's not just about the technicals, it's about the mindset you bring to the charts.
Exactly. He argues that you have to develop a mindset that allows you to see the market for what it is, not what you want it to be.
Detaching from those emotional biases and observing the price action objectively?
Precisely. It's about becoming a more neutral observer of the market, like a scientist studying a specimen.
That sounds incredibly challenging, almost like achieving some Zen-like state of market enlightenment.
It is a practice, not a destination. But the more you can cultivate that objectivity, the better your trading will be.
Okay, so besides challenging my assumptions, what else can I do to cultivate that objective mindset?
Well, he talks a lot about the importance of meticulous analysis of your trades, both winners and losers.
Right, the Book of Truths. We talked about that earlier. But how does that tie into objectivity?
It's about understanding your own psychological patterns. By recording your emotions, your thought processes, and the external factors that influence your decisions, you start to see where your biases lie.
So you're basically becoming your own therapist, uncovering those unconscious patterns that might be sabotaging your trades.
It's a bit like that. The more you understand your own tendencies, your strengths and weaknesses, the better equipped you'll be to navigate the market.
That makes sense. Because if you're not aware of your own biases, they'll just keep tripping you up.
Right. And he argues that some of the traits that make us successful in everyday life can actually be counterproductive in the trading world.
Like the supermarket mentality we talked about earlier.
Exactly. That's a prime example. He also talks about how in everyday life, we're often rewarded for being helpful.
Being helpful, how can that be a bad thing?
Well, in trading, that same tendency to help a losing trade by giving it more time or averaging down can be disastrous.
It's like you're trying to rescue a stock that's clearly on its way down.
Right. You're letting your emotions, your empathy, cloud your judgment. Yeah. And that can lead to bigger losses.
Okay, so helpfulness is out. What other personality traits can trip us up in the markets?
He talks about the dangers of confirmation bias, which is something we all fall prey to, not just in trading.
Oh, confirmation bias. That's where we seek out information that confirms our existing beliefs, right? Like only reading news articles that support our political views or only following people on social media who agree with us.
Exactly. And in trading, that can manifest as only paying attention to data or analysis that supports your pre-existing trade idea while ignoring any evidence to the contrary.
So if I'm convinced a particular stock is going to go up, I might dismiss any negative news or warning signs.
That's a perfect example.
Yeah.
And it can be really dangerous because you're basically blinding yourself to potential risks.
So how do we avoid falling into that trap? How do we stay open to information that challenges our beliefs?
It's tough. It takes a conscious effort to seek out dissenting opinions, to challenge your own assumptions, and to be willing to change your mind when presented with new evidence.
I guess it's about being intellectually honest with yourself, even when it's uncomfortable.
It is. And it's about recognizing that you don't have all the answers, that the market is always evolving, and that you need to be constantly learning and adapting.
So it's not about being right, it's about being willing to be wrong.
Exactly. It's about detaching from your ego and being open to new information, even if it contradicts what you currently believe.
This is all making me realize how much of trading is about psychology, about mastering your own mind.
It's essential.
Yeah.
Because at the end of the day, your biggest enemy in the market is often yourself.
So we've talked about challenging your assumptions, understanding your biases, and being open to new information. But what about the actual process of trading? Does Hougaard offer any specific strategies or techniques that align with this mindset?
He does. And one of the key things he emphasizes is the importance of developing a process, a system for analyzing the market that minimizes those emotional biases.
So if not just relying on charts or candlestick patterns, how does he recommend we approach reading the market? What's his secret sauce?
He's a big believer in what's called price action trading.
Price action trading. What's that?
It's about reading the raw price data, the actual movements of the market, and understanding the forces of supply and demand that are driving those movements.
So instead of looking for mystical patterns or indicators, you're trying to understand the underlying forces at play.
Exactly. It's a more nuanced approach,
Yeah.
and it requires a deep understanding of both technical analysis and human psychology.
Okay, so it's not just about the numbers, it's about understanding the psychology of the crowd, the collective hopes and fears that are reflected in the price movements.
Right, because ultimately, you're not just trading against the market, you're trading against other people, each with their own biases and motivations.
That makes it sound even more complicated.
It is, but it's also what makes it so fascinating. And to succeed in that environment, you need to have a solid understanding of your own psychology, your own strengths and weaknesses, and your own tendencies under pressure.
We've talked a lot about controlling emotions, but does Hougaard ever admit to getting emotional when he's trading? It's hard to imagine anyone staying completely detached, especially when real money is on the line.
He's very open about the fact that he's human. He feels the adrenaline rush of a winning trade and the sting of a loss, just like anyone else. But he's learned to manage those emotions, to not let them dictate his actions.
So it's not about becoming some emotionless trading robot. It's about acknowledging those feelings, but not letting them take the wheel.
Exactly. He talks about the importance of being aware of what he calls two brains, the conscious, rational brain and the subconscious, emotional brain. And the key is to train your conscious brain to override those instinctive emotional responses.
It's like a constant internal battle. Your gut is screaming, sell, but your rational mind is saying, hold on, let's look at the data.
That's a great analogy. And to win that battle, you need to have a clear set of rules, a training plan that you can stick to, even when your emotions are running high.
So it's about having a system, a process that takes the emotion out of the equation.
To the extent possible, yes. Because if you're constantly reacting to your emotions, you're going to be all over the place. And that's a recipe for disaster in the market.
Does he offer any specific techniques for managing those emotional impulses?
He does. He talks about the importance of practicing detachment from the outcome of his trades. He has a mantra, maybe I will win, maybe I will not win. It doesn't matter, I follow the process.
So it's about focusing on executing your plan, trusting your analysis, and detaching from the emotional roller coaster of winning and losing.
Exactly. It's about letting go of the need to control the outcome and focusing on what you control, your actions, your decisions, your process.
That sounds very Zen-like.
It is. It's about cultivating a sense of inner peace and acceptance, even in the midst of the chaos of the market.
Okay, I'm starting to see how this all ties together. It's not just about the technicals, it's about developing a certain mindset, a certain way of being in the world.
Exactly. And that mindset can benefit you in all areas of life, not just trading.
So trading is a path to personal growth. Who knew?
It's true. And Hougaard's book is a great testament to that. He doesn't shy away from the psychological challenges of trading, but he also offers a path forward, a way to overcome those challenges and become a more successful, more resilient, and more fulfilled trader.
Well, I have to say, I'm feeling inspired. I'm ready to tackle those two brains and start mastering my own mind.
That's the spirit. And remember, it's a journey, not a destination.
So we've covered a lot of ground here, from challenging your assumptions to understanding the psychology of the crowd. But I'm curious, does Hougaard ever talk about the collective psychology of the market? Like how the actions of individual traders can create these larger market trends or even bubbles?
He does. He actually revisits that supermarket mentality concept and explains how it can lead to herd behavior.
Herd behavior, like everyone following the crowd.
Exactly, with traders piling into a rising market simply because everyone else is doing it, ignoring the underlying fundamentals.
It's like that fear of missing out, that feeling that if everyone else is getting rich, you're being left behind.
Right. And that fear can drive prices up far beyond any rational valuation, creating these unsustainable bubbles that eventually burst.
And on the flip side, that same fear can cause a panic sell-off with everyone rushing for the exits at the first sign of trouble.
Exactly. He even cites the IG Client Sentiment Report, which tracks the positions of retail traders, as evidence that the majority of traders are often on the wrong side of the market.
Meaning they're buying when they should be selling and selling when they should be buying.
Yep, driven by those emotional impulses, that herd mentality.
It's like they're looking in the rearview mirror, reacting to what's already happened instead of anticipating what's coming next.
That's a great analogy. And it highlights the importance of developing an independent mindset, of doing your own analysis and not getting swept away by the crowd.
So how do we do that? How do we resist the urge to follow the herd?
It takes discipline, self-awareness, and a willingness to go against the grain, even when it feels uncomfortable.
So it's not about being a contrarian just for the sake of it. It's about having the conviction to stick to your own analysis, even when everyone else is doing the opposite.
Right. It's about trusting your own judgment and not being swayed by the emotions of the crowd.
This all makes me think about that old saying, if you want to be successful, do what successful people do. But in trading, it seems like the opposite is true.
You could say that, because if you're doing what the majority of traders are doing, you're probably going to end up losing money.
So it's more like, if you want to be successful, do what unsuccessful people don't do.
Exactly. It's
Yeah.
about thinking for yourself, developing your own process, and having the courage to go against the herd.
That's a powerful message, and it's one that I think a lot of traders need to hear.
I agree. It's a reminder that trading is not a game of following the crowd. It's a game of mastering your own mind and making your own decisions.
And that takes a lot of courage, especially when the market is moving against you.
It does. But that's where the real rewards lie, both financially and personally.
This has been an incredibly insightful conversation. I'm starting to see trading in a whole new light.
I'm glad to hear that. It's a fascinating field, and there's always more to learn.
Well, luckily for us, we have one more part of this deep dive to go. You know, it's amazing how much this conversation has shifted my perspective on trading.
In what way?
I used to think it was all about, like, finding the right strategy, the perfect indicator, cracking the code.
Yeah, a lot of people get caught up in that.
But now I'm realizing it's so much more about mastering yourself, your emotions, your mindset.
Hougaard really drives that point home, doesn't he?
He does, and it's especially powerful when you consider his own personal story, his struggle with alcoholism.
Oh, yeah, that was intense.
To be so open and honest about hitting rock bottom and how that experience ultimately shaped his approach to trading.
It shows a lot of courage.
It does, and it makes his message even more impactful, I think.
Definitely.
Mm.
He's not just preaching from some ivory tower. He's been in the trenches, he's faced his own demons, and he's come out the other side.
And he's using that experience to help others.
Exactly. It's like he's saying, look, I've been there. I know what it's like to struggle, but it's possible to overcome these challenges.
And it's not about being perfect. It's about being willing to confront your weaknesses, your bad habits, and make a change.
That's where the real growth happens, both in trading and in life.
It's interesting because he's not advocating for self-flagellation, like dwelling in guilt and shame.
No, not at all.
It's more about using that emotional discomfort, that disgust even, as a springboard for change.
Right. It's like, okay, I'm disgusted with this behavior. I don't want to feel this way anymore. So what am I going to do differently?
It's a powerful motivator.
It is. And it's something that can be applied to any area of life, not just trading.
Absolutely. So we've talked a lot about the psychological side of things, but does Hougaard offer any practical advice for actually, developing a trading plan and sticking to it?
He does. He emphasizes the importance of having a clear set of rules, a system for analyzing the market that minimizes those emotional biases.
So, if you're feeling impulsive, if your gut is telling you to do something, you have the system to fall back on.
Exactly. You've done your analysis, you've back-tested your strategy, and you trust it, even when your emotions are screaming at you to do something else.
That takes a lot of discipline.
It does. But that's the key to consistency in trading.
He also talks about the importance of patience, right?
Oh, absolutely. Patience is essential in trading. But it's something that a lot of people struggle with.
Especially in today's world, where everything is so fast-paced, instant gratification,
Right. We want results now. We're constantly bombarded with messages that promise quick riches and easy wins.
But trading doesn't work that way, does it?
Not at all. It's a long game. It's about consistency, discipline, and managing your risk.
It's like Hougaard says, trading may not offer you the rainbow you had hoped for, but does it have to?
I love that quote. It's so true. It's about finding joy in the process, in the challenge, and not getting too caught up in the outcome.
Because ultimately, the outcome is out of our control.
Right. We can't control the market, but we can control our own actions, our own decisions.
And that's a powerful realization.
It is. It's about taking responsibility for your own trading journey and not relying on some magic formula or guru to tell you what to do.
So trading is a path to self-discovery.
Absolutely. It's a journey of self-awareness, discipline, and resilience.
And those are qualities that can benefit you in all areas of life, not just trading.
Exactly. It's about becoming a more mindful, more intentional, and more empowered version of yourself.
Well, I have to say, I'm feeling pretty inspired right now.
That's great.
I'm ready to take on those two brains and start mastering my own mind.
That's the spirit. And remember, it's a journey.
No quick fixes, no easy answers.
Nope. Just consistent effort, self-reflection, and a willingness to learn from your mistakes.
And maybe a little bit of disgust along the way
Just a touch.
to keep you motivated.
Well, on that note, I think we've covered a lot of ground today.
We have.
From battling our ingrained biases to understanding the psychology of the crowd and finding a healthy balance between trading and life.
It's been a great conversation.
It has. And I think we've all come away with a deeper understanding of what it truly takes to succeed in trading.
Absolutely.
It's not just about the technicals, it's about the mental game, about mastering yourself.
And that's a journey that anyone can embark on.
So to all our listeners out there, keep diving deep, keep learning, and keep pushing yourself to become the best traders and the best versions of yourselves that you can be.
Well said.
And until next time, happy trading, everyone.